I'd now like to hand over to Eithne Treanor, a colleague of mine that have done a number of these events over the years. She'll be very familiar to all of you as she was a key face in the World Energy Congress in 2019 and hosts the World Energy Talks, the WEW Talks. And she'll be anchoring a number of the sessions with me over the course of the next couple of days. Our next global plenary is going to be the regional perspective, and this is about managing energy transition in the Middle East. And on that point, I'd like to hand over to yourself, Adnan, to take us through the session. Thank you.
And hello there, and thanks so much for staying with us on World Energy Week Live. We have tremendous content, of course, throughout the day. And right now we're really going to be looking at one of the regional perspectives and looking at what's happening in terms of managing energy transition in the Middle East. I'm Adnan Treanor, and I'm with you for this session. And I have just a tremendous lineup of guests here, experts in the region who can really shine light on what is happening and really examine the economy, the producers, the consumers, just really lay the land in terms of what's going on. So I'd love to introduce you to my esteemed panel that we have here. I'm delighted that joining us is the president of KAPSARC. Adam Sieminski is joining us. Great to see you, Adam. We're also being joined by the General Director of the Kuwait Foundation for the Advancement of Science, and of course the former acting Secretary General from OPEC, Dr. Adnan Shihab-Eldin. Lovely to see you again. The CEO of Qamar Energy joins us, Robin Mills. Good to see you, Robin. And also the president of Nasser, Saidi and Associates, and the former Minister of Economy for Lebanon, and of course the former Deputy Governor of the Central Bank, Dr. Nasser Saidi joins us. So this is our lineup. And as I say, the knowledge and the talent and the expertise that we have here, I'm so excited to be able to share this with you. Dr. Nasser, if I can start with you and ask you to put your economist hat back on and really take us around the region and give us a look in terms of here we are going into the final quarter of 2020. What's the state of the economy here like at the minute, and what are our expectations?
Well, we need to start by realizing that the world is going through the deepest recession we've had since the Second World War. So we're expecting world growth to decline by about 5%. The implication, of course, means that the demand for oil and the demand for energy generally is going to be declining. But for the region, there's a double effect, because it's not only the demand for oil, which means lower oil prices, and the outlook for oil prices is highly uncertain, because it depends on when we will get any semblance of recovery, which is not on the cards at the moment. But in addition to that, we've had COVID-related lockdown effects. And the reason why that's important for the countries of the region, particularly the GCC, is that it's affected transport and logistics, hospitality, tourism, and other sectors, which the oil producers were counting on to diversify away from oil. So you have a double whammy effect. It means not only is the oil sector affected, it means also the non-oil sector is also affected. And therefore, our forecast for growth in the region is a decline of around 7%. This is unprecedented. We haven't had a decline of this size, again, since the Second World War, since 2008, 2009. So the main issue moving forward for the countries of the region is how are they going to adjust to that? You've got an oil price shock, you've got the COVID shock, and the COVID shock is not likely to be temporary. So I want to warn on that. We need to think that the recovery is not going to be V-shaped. We know it's not going to be V-shaped already. We're entering into the fourth quarter. Many of the economies of the world are limping. China is picking up a little bit, but not with the impact on oil demand that will satisfy the oil producers. So 2021 is not going to be a strong year of recovery, in my view. We're going to have subdued economic growth. And therefore, again, for the countries of the region, the prospects of a quick recovery in 2021 are unlikely to be there. And that means that countries will have to adjust in terms of fiscal policy, in terms of monetary policy, but also in terms of energy policy. What are they going to do to manage a transition in terms of energy, which was already there because of climate change issues, because of all sorts of commitments that we have, and the rest of the world is adjusting. So think of this world that is going through these COVID waves, and it's one wave after another. And the COVID dynamics is going to be highly dependent on how countries react, whether you're going to get a vaccine, how quickly would it be distributed and used, would it have an impact on economic activity? Those are big unknowns facing us. So the countries of the region are facing many sources of uncertainty. Oil prices, economic recovery at the global level, climate change risks are increasing, as we've seen right now. And at the same time, the low oil prices means a large fiscal shock for the countries of the region, particularly the GCC. So budget deficits are going to rise to about 10% of GDP. That is unprecedented for the GCC countries. That's 10% as compared to 2% in 2019. And therefore, the GCC countries are going to have to tap the financial markets. Some of them are going to have difficulty in doing that. Countries like Oman, Bahrain are going to have difficulty maybe accessing financial markets at the same terms as they had before. And if you look at the rating agencies, they're aware of these macroeconomic risks as well as the climate risks, which are raising issues of sustainability of fiscal policy, because we have very generous entitlement programs. So recently, for example, Moody's downgraded Kuwait out of all countries, basically because of potential fiscal risks having to do with continued large spending. So quite a few risks on the horizon, a lot on the policy agenda, fiscal, economic policy, health policy, as well as managing the energy transition. So that's a broad picture of what is facing the region in terms of policy.
And indeed, as we were starting, 2020, a whole new decade, I think exactly just a year ago, at the beginning of the year, things were looking very different. So huge challenges out there at the minute. Robin, I'd like to bring you in here. And, given the state of the region and given the state of demand and indeed the economy in general, when we look at oil production and we look at the lowering demand, and we look at the national oil companies around the region, how are they coping? How are they managing the energy transition? And indeed, how are they dealing with the situation at hand as well?
Well, the situation of the Middle East NOCs is extremely interesting, but also very challenging and complicated. So, recently we've heard a lot of news about particularly the European international oil companies, BP and so on, talking about the imminence of peak oil demand, talking about their new business models where their oil production will be shrinking and they'll be going into renewables and other new energy forms. And eventually perhaps will become integrated energy companies as their kind of new mantra, and the oil and gas will only be a part of their business. And they're committing to net zero emissions by 2050 and so on. And that is a strategy that they can pursue. I think a very difficult, challenging one to pull off, but it's a valid approach. But for the Middle East NOCs, the challenge is quite different because their whole raison d'etre is to develop the national oil and gas wealth. They're the custodians of the hydrocarbon wealth of the major Middle East producers, which in many cases has been the foundation of the economy through the whole modern history of these states. And so they cannot say that they're going to get out of oil and gas and they're going to become renewable companies. They have to make the most of the hydrocarbons that they have. It's not to say they can't go into other energy forms too, but they have to maximize the value of their oil and gas. But they have to do this in an increasingly climate compatible way. And really the Middle Eastern NOCs and their host countries have been going through not just one energy transition over the past couple of decades, but actually three successively or almost at the same time. So, the first one of those is the shift of their main markets away from North America and Europe towards Asia. And that, you could say, is a very long-running shift, but particularly from the early 2000s with the rise of China, that got a lot of impetus. So their main clients are changing, and that has a lot of market implications, also geopolitical implications. And the second shift is dealing with US shale oil. And this has been a factor since the early 2010s, but very much from 2014 when the oil price crashed because of the buildup of US shale oil production. And this again has impacts on their markets, but it particularly impacts on competition for them and on a major fall in oil prices even pre-coronavirus. And then they have the third transition, which is the one which the term is normally used, the rise of new energy technologies, solar and wind power, batteries, electric vehicles, and perhaps on the horizon things like hydrogen. And the move away from hydrocarbons and carbon-containing fuels in general because of climate concerns. And that is obviously a transition that we're we've very much entered into, well on the way, but that has a very long way to go and that will play out through the whole of the 21st century. And for these countries, you look at again, I go back to the European IOCs, they have reserves lives of 10 or 15 years at current production rates. The Middle East countries, depending who you look at, have reserves life of 50, 70 or 100 years of current reserves of oil and gas. So they still have the responsibility to plan for the very long term. And they've been looking at things, of course, developing new markets, developing petrochemicals, refineries, both at home and abroad in nation joint ventures and so on to protect their markets. They've been looking at lower carbon, trying to reduce the carbon intensity of their own businesses. But they also, to some extent, some of them have looked into new energy forms. But really, we've seen renewables in the region very much driven by national utilities, not by the national oil companies. Things like hydrogen have been looked at, still at a very early stage. Carbon capture and storage is beginning to be adopted. But still, I think the Middle East NOCs are at a pretty early stage of their evolution on this. But they're entering a time in which the whole energy industry is moving and adapting much faster. And this is going to be a significant challenge to keep up and adapt at that pace, even to keep up, let alone to be the leaders in the low carbon transition that they really need to be.
And indeed, I really want to talk about some of those technologies, and I know many of you will be able to give us some great input into that. Thank you, Robin, so much. Dr. Adnan Shihab-Eldin, when we look at hydrocarbons as part of the energy mix of the future, and probably for some time as we go through this transition, we really also need to be looking at solutions, I guess, that would lead us into the least cost path towards low or zero carbon emissions. How do we manage that? Where do we need to head? What are we looking for?
Well, thank you, Eithne. And I would like to add to what Robin said. The challenge is on the Middle East oil and gas producing countries is much more than the challenge that other parts of the world oil and gas industry is facing because of the reasons he mentioned. And if you look at the picture 10, 20 years ago, and you looked at what was the outlook for oil and gas demand, let's say in 2040, every year we have been seeing that outlook going down. And that means we have actually entered into an energy transition. And I think that's a very important fact. We are now into a new mega energy transition characterized by transition to what is called clean fuels or clean energy. That means we have to find a way in our part of the world how we continue to compete and derive value from our huge reserves, hydrocarbon reserves, hydrocarbon endowment, in this transition and beyond, not just during the transition. And that's doable. That's doable if we look at technology, innovation, and ensure that we are ahead of the game rather than following the game. What do I mean by that? If you allow me just 1 second. What do I mean by that? We know that the world is moving into these low carbon energy sources, wind, solar, and the cost has been coming down. But the markets and the policies need to also be driven not just by those importing countries, but they need to be driven by our parts of the world. So our agenda is to make sure that on our hydrocarbon, we clean them, we make them not just during production, but for consumption, so that they are low carbon or zero net carbon exports. Second, we have to make sure that the policies globally for trading in energy is not against those low carbon hydrocarbon exports. And that's possible, but I don't want to preempt the discussion right now.
Indeed, again, you're laying out some great challenges for the region, and that's what is going to be quite exciting about this challenge, where we look at a lot of what we can do and what needs to be done. Adam, when we look at the region in terms of the transition and where we are, it really comes down to what you talk a lot about, I think, to the circular carbon economy. How good are we, within that at the moment? Do we need to speed that up? Talk to me a little bit about that, and particularly, who needs to do what, and how do we make sure that we can be within there and move forward?
Thank you very much, Adnan. And it's what a delight it is to join you today in this very distinguished set of guests. I'd like to actually build a little bit on what Nasser, Adnan, and Robin said. Nasser talked about the near-term effects of the COVID crisis. And one of the interesting things about that is the level of stimulus that's being suggested to try to keep the economy going. There have been a lot of suggestions to have green stimulus and make sure that investment is pointed towards clean energy. Adnan and Robin both talked about the transition and climate movements. One of the things that I'd like to start off with before I talk about the circular carbon economy is that there's really three kinds of carbon. There's living carbon. It's like what we breathe in the trees and agriculture and so on. There's durable carbon, and that's what kind of cycles around in the economy. It's often locked up for significant periods of time in materials and so on. And then there's fugitive carbon. Fugitive carbon is what's getting into the atmosphere, and that's what we really need to deal with. So one of the famous quotes from Bill McDonough is, "Carbon is not the enemy." We have to think about how we manage the carbon, particularly the fugitive carbon. Everybody's been talking about climate change and the role that climate change can play in the transition toward driving this transition. It's really become a key area of focus because of rising temperatures, all of the headlines that we see every day about flooding and fires and so on. The scientific community is that we need aggressive controls on greenhouse gas emissions. And world leaders met in Paris in 2015 to pledge to deal with that. Realistically, the progress on implementing these promises has been challenging. What we're now seeing is a lot of countries are responding to the climate concerns by mandating renewable energy sources. There are even global movements to completely ban carbon as a source of energy. Just think about the announcement the other day from California about, no more gasoline or diesel-fired cars. And of course, a shift away from traditional fuels would be a significant effect on the revenues of all of the hydrocarbon-rich countries in the Middle East region. I think that this is a very narrow focus, this idea that fossil fuels are the problem. And there are unintended consequences of looking at it that way. You've got a lot of existing infrastructure that would be underutilized. You have issues associated with access and reliability. And in a lot of areas, there's really no practical solutions to abate the emissions. Think about aviation, shipping, steel, cement, and so on. And on top of all of that, everybody here has been looking at forecasts for the energy mix out to 2050, and virtually every reputable prediction for how much hydrocarbons are still going to be used in 2050 suggests that it's significant. So you've got to manage those emissions. And I think that the way to do that is to think about all of the options that you have in the toolkit, right? Every tool that's in that toolkit is what you need. So what KAPSARC has been doing is we've been working on this idea of the circular carbon economy and partnering with international organizations like the International Energy Agency, the IEA in Paris, the International Renewable Energy Agency, IRENA, in Abu Dhabi, the Nuclear Energy Agency, the Organization for Economic Cooperation and Development, and the Global CCS, that's Carbon Capture and Sequestration Institute in Australia. We're writing reports on the key elements of the circular carbon economy with these organizations. And this is going to be delivered this Sunday at the G20 Energy Ministerial meeting that's being hosted here by the Kingdom of Saudi Arabia. So, and I want to just give a few examples of what's going to be in this study, and then I'll wrap up. Why it's important, the whole idea of the circular carbon economy is it's an outgrowth of the circular economy. The core factors in the circular carbon economy or principles are the 3 R's: reduce, reuse, and recycle. And the circular carbon economy adds a 4th R, which is remove. And these 4 R's are the basis of carbon management. The reports that will be in the circular carbon economy output include looking at energy efficiency, at non-bio renewables like solar and wind, nuclear power, carbon utilization, doing things, for example, like making fertilizers, methanol, ethanol, enhanced oil recovery, and so on using CO2. Bioenergy, big thing in this region is mangrove forest restorations, for example. Carbon capture and storage. This region is uniquely suited to storing CO2. Hydrogen is going to be, I think, a very positive opportunity in the region. NEOM, for example, here in Saudi Arabia has got a $5 billion project underway with Aqua Power and Air Products and so on. And we'll look at the policy. So, conclusion. People don't want abstract energy. What they want is cold drinks, hot showers, and big cars. That's what people love, right? So the question is, how can you get those things for people, but still keep the environment clean? I think it's doable. You know, in the circular carbon economy, people don't want necessarily a fuel or bioenergy or renewables or a mitigation strategy. What they want is really good products and services and a clean climate, right? That's what they want. And an improved quality of life. People want income, right? So how can we do that? I think the circular carbon economy says it is doable. You have to use all of the options that are out there, not just picking and choosing one. It's great for an individual country to pick the ones that they think suit them, but the field's got to be left open for everybody to jump in and use everything that's doable to make this happen. And then I think it'll work. So Aithne, there you go.
And indeed, you're so right. And possibly sometimes we look a little bit too much at the technicalities and the issues that concern us, but we have to look at the wider picture out there, yes, and consumer demand is sometimes very different. Robin, I want to actually bring you in here because I'm going to stay with this in terms of how do we reduce that carbon. And, you know, Adam mentioned there carbon capture and storage and utilization, and that, you know, you've written a book on it, Robin. Stay with this topic for us for a few minutes in terms of, you know, the technology that's out there and what's in place that can actually help.
Yes, I mean, you know, we often hear, and still hear today, carbon capture and storage being written off as unproven or too expensive. And, you know, that's just, it just isn't. You know, there are numerous operating carbon capture and storage projects worldwide. This is not a especially complicated technology. The basic principles of it have been known since the 70s at least. And it is widely used, particularly in the oil and gas industry. And it's not too expensive either. I mean, I think one of the problems here is a lot of the costs of climate action for things like renewables mandates and so on are just hidden in a mandate rather than a price per ton of carbon. If you look at the cost of carbon capture and storage, depending on the project, for a very low cost, straightforward project, it could be $20 a ton. For the more complicated projects, it maybe goes up to 100. And those are not small numbers, but they're well within the range of carbon abatement from many other methods as well. You know, I think there's also an idea taking hold that solar and wind and electric vehicles have solved the problem. You know, well, they haven't. There are numerous emitting sectors, and particularly industry, where we don't really have many good valid technologies today to reduce emissions, or certainly not to eliminate emissions. If we talk about you know, things like the cement industry, steel industry, you know, there are solutions, hydrogen perhaps, and so on. But carbon capture and storage does stack up very well as a technically quite feasible and not too expensive solution. The problem is that carbon capture and storage, you know, it's associated with the oil and gas industry. That creates public opposition to it in many places, and it's never really got the policy support that it needs. We are just now, I hope that we're now turning the corner on that. You know, the European carbon prices are rising towards the level that they'd make carbon capture and storage more feasible. We've seen a big upsurge in clusters of carbon capture and storage projects in Europe, Northern Europe in particular, in the UK, in the Netherlands, in Norway. Those all look like strong projects with serious backers behind them. The US new provisions in the US tax code are very supportive of carbon capture and storage. I hope that will persist in a new administration, whichever one that is. So, you know, there's some real momentum behind this. And in the Middle East, the Middle East conditions for carbon capture and storage are exceptionally good. There's a long experience, familiarity with the oil and gas industry. There's a lot of public support for it. The geology is exceptionally good for carbon capture and storage. The sites of storage are located close to the emitters. You've got dense clusters of industrial emitters and power sector users all along the Gulf Coast, and the oil fields are all well within close proximity of that. So really, the Middle East is a place that should be pressing ahead with carbon capture and storage. And we've seen a major project, the first commercial scale industrial carbon capture and storage project in Abu Dhabi on a steel plant. Saudi Arabia has a large carbon capture and storage project on gas processing being used for enhanced oil recovery. We've seen big announcements recently from ADNOC, Abu Dhabi National Oil Company, and from Qatar Petroleum that they both plan to use a lot of CCS in new projects. So it's starting to pick up in the Middle East. Now, it's very important for decarbonising the energy sector in the Gulf and reducing emissions from perhaps from the power sector, but very much from the industrial sector, lowering the carbon footprint. And I think when we see suggestions that Europe might be bringing in a carbon tax or a carbon border tariff on high carbon imports from outside the bloc, it's very important for exporters to Europe to be able to reduce their carbon footprints, whether that's the footprint of steel, aluminium, cement, fuels, whatever else is being exported to Europe. And you could imagine that other regions might fall in line with that as well. And then the other side of carbon capture and storage that I find very exciting is the idea of direct air capture. So taking carbon dioxide directly from the atmosphere. We know we're going to have to do this. I mean, in my mind, there is no credible way of getting to the 1.5 or 2 degree target within the time that we've got left without taking a lot of carbon dioxide previously emitted out of the atmosphere. There's also a lot of sources, smaller sources, mobile sources that are pretty hard to decarbonize and that are going to have to be offset in some other way. And if you look at BP's targets or the other zero carbon targets by 2050, many of them acknowledge that they will have to use some kind of offsets for their remaining emissions. That may be bio offsets, as Adam mentions, mangroves, other forest kind of offsets. Yeah, those will probably be significant as well. But direct air capture is I think, could be a major player too. We've seen Occidental in the US making a big commitment on a direct air capture project where they're going to put the CO2 into an oil field. Now you may say, well, that's just releasing more oil. Yes, but if we have enough direct air capture, we can create carbon neutral oil production this way, as long as we offset every ton of carbon that we're taking out of the ground with a ton that goes in or more. So this, I think, is an important technology because this is one way for the Middle East to be able to use its oil and gas resources indefinitely and to make them zero carbon by offsetting all the emissions with direct air capture. And for the same reasons I've expressed, the Middle East is a good place to do direct air capture. Has very good solar resources as well. You can have renewable driven direct air capture systems that are inherently low carbon, plenty of space to do this in the Middle East. And you can imagine this is a new industry for the Middle East where it could be paid by other regions to offset their emissions. So I think this it's an emerging area, but a promising one. And it's one possible pillar of a future Middle East low carbon economy.
And I think what you say there is one possible pillar. Adnan, if you can come in here, when we look at some of the maturing CCS technologies, we've been talking about this for many, many years. Yes, one pillar here, but is the investment there? Is the will there? Because it's been taking a while actually to get that money and to get the implementation of carbon capture, storage and usage technology. So what's holding it up?
Well, I think in the past, what has been holding the region up is the optimism that the peak demand is long way out. So that kind of delayed the decisions to really face up to the challenge that we really have to do it. And I think this is behind us now. My expectation is that given what's happening over the last few years and the outlook to 2050, where people are starting to talk about zero emission by 2050. The other day, I think Germany the parliament just passed a law saying that they want to go 70% renewable in their power sector. And you see what happened in California. So I think that the Robin has outlined, it is the challenge now for the hydrocarbon owners to invest in the mature technology of CCS. And my expectation is that we will need 10 times as much investment in CCS over the next 10 years as we have seen in the past to begin to make that move forward. And that 10 times, most of it has to come from the owners of the hydrocarbon. Robin pointed out to something very interesting, which I have been talking about, direct air capture. Because if that is actually mastered at a low cost, you can think of every barrel of oil or every gasoline barrel that you're exporting is stamped carbon free because you have already offset the carbon ahead of time. And that's not far off, but all of these technologies depend critically on CCS. And we know that many of the European countries or many of the large consumers do not wish to see carbon in the picture. And Adam have argued why this is not realistic. We know it's not realistic because there is no way we're going to get to the 2050 or 2040 zero emission target without nuclear, without low carbon. And I think now we are opening up with the hydrogen, because now hydrogen is coming into the picture in a big way in the consuming nations, because they are seeing it. Japan, for example, they're seeing hydrogen as a way of their future. Now, they cannot produce all of the hydrogen themselves, so they're going to buy it, they're going to import it from Australia, which has to be based on coal, or from Saudi Arabia, based on oil and gas, and so on. So I think we're going to see investment in CCS in the Middle East has to go multiplied by a factor of 10. I give you an example. If you want to sort of take the European countries, 1% of their power sector in 2030, it's equivalent to about 1,200 million tons of oil equivalent. If you take 1% of that, you need, in terms of CCS facilities, more than 10 or 20 times what we have had already. And there is a market for CCS in Northern European countries, in the UK in particular. But I think most of the ready markets are in the Middle East. And I expect the national oil companies like Aramco and ADNOC and KPC will start putting that investment in, especially the technology is maturing and the costs are coming down. And if you link CCS with hydrogen, then the picture changes dramatically.
We'll talk a little bit more about that because I know, and everybody is talking about hydrogen at the moment, so I do want to come back with it. Adam, stay with this at the moment, and we, look at the investment issues that are out there, but we also look at, what institutions like KAPSARC can do in terms of the people you work with, the partners you have, and all of that. Do you see this as high on the agenda and, actually a practical application that we hopefully will stop talking about one day and be seeing results on this?
Well, the results would be driven by setting a good foundation in law and regulatory arrangements. And then, as you mentioned, the financing. Companies can finance this themselves if they have enough demand from their customers. If they needed help, there are national investment funds that could participate. The financial community around the world has an increasing number of environmental and clean energy funds that individuals can invest in. And that, I think, makes it doable. What really has to exist to push this forward, to make this technology advance and technology acceleration, I think is going to be key, is first of all, agreeing on a global basis that we really do need all of the available technologies. And then secondly, I think creating the markets that will drive it. A lot of work is being done here in Saudi Arabia, for example, by companies like Saudi Aramco and SABIC and others on research and development associated with reducing, reusing, recycling, and removing carbon. Both Adnan and Robin talked about direct air capture. There are some projects underway here for that. In addition to what people call blue hydrogen made from hydrocarbons, there's also green hydrogen, and that's being advanced in the kingdom too, using solar and wind power to generate hydrogen that can either be used as is or converted to ammonia and shipped somewhere to be either reconverted to hydrogen or burned directly as ammonia. So there are a lot of opportunities out there. I think that financing generally comes when there are returns available, and the returns I think will come when we've got a good legal and regulatory foundation and the financing to drive it.
Dr. Nasser, I want to bring you in here. We talk about technology advancement, and we talk about, I mean, it's a very dynamic time in terms of what's happening in the energy sector right across the world, and indeed here in the region as well, because it has to be, and everybody wants to be on board, and I think the political will is there as well. Do you see actually the situation at the moment, the economic situation, and then I suppose exacerbated with having COVID on top of this as well, in terms of, you know, speeding up that transition, you know, to a lower carbon environment? What do you think?
Well, I want to come back a little bit because we've had a good discussion on the technology side, very interesting, but I felt it very optimistic and looking at it as being certainly benign. I don't take that view. So I'm a practitioner of the dismal science. So let me take that side and raise some serious concerns.
Okay.
The first is that we're in a period of plentiful energy. Yeah, you've got shale, you've now got renewable energy, clean energy, new discoveries. And so I think we already have gone beyond peak oil demand. So in my view, we're already there. It's not something that's going to happen in the future. And the implication is that increasingly, I think oil prices will remain low, and they're likely to go much lower in the future. So let me put it very simply. Our countries in the Middle East, our oil producers, and on GCC in particular, have their major wealth is in fossil fuel assets. Those fossil fuel assets may very well become stranded assets. They may longer be economical to extract. I think that is the single most important existential threat facing the countries of the region. So forget about the technologies, they may be available, but the public policy issue at the moment is two things. How do you deal with the transition, and how do you diversify your economies? CCS is fine, it's great, you adopt the technology, it's not going to create any jobs for your young people. 60% of our young people in the Gulf countries are below 30 years of age. So the question is, where do we create the jobs for them? So to my mind, what we need to have across the GCC and the oil producers, it's not just circular economy. You've got to say, I want to go for a Green New Deal. And that is a big proposition because it means removing oil subsidies, because we're carbonizing like hell. Our carbon footprint is one of the highest in the world, and much of it is because we subsidize fossil fuel use. You've got to focus on energy efficiency because that's a low-hanging fruit, and make massive investments in energy efficiency, and those can create jobs. You've got to make massive investments in renewable energy, so it's solar, wind, and geothermal, which we have not really touched in the region. But then really go beyond that and say, can I create export technologies as a result from that? So let me paint a different vision. It's a vision whereby the GCC countries, the Arabian Peninsula, is an exporter of renewable energy by linking grids, not only across the GCC, but electric grids into East Africa, into Egypt, and then into Europe, across the sea into Pakistan and India. That's the sort of thing we need to think of. Can you go into clean petrochemicals in many ways? I think what we need to think of is where do we create the jobs for the countries of the region? Can we become producers of clean energy and renewable energy? I think that is where we need to focus our attention. And in there, I want to come back to this issue of financing because I think it's critical. As long as you have subsidies on fossil fuels, and we're the biggest subsidizers of fossil fuels in the world, you're not going to be encouraging clean energy and renewable or CCS. What you need to do is to remove those subsidies so you start giving the right incentives to shift away from a fossil fuel, highly carbonized economy towards decarbonization. That has got to be the path on which we're on. If you remove the subsidies and you impose a carbon tax, then you've got the financing required to invest in renewable energy technologies. That is the path on which we have to go. Second thing is you've got countries in the region which are big capital exporters. We're some of the biggest capital exporters in the world. Now, what we're doing with that capital is we put it in use in Europe, United States, and world markets for their investment. What we need to do is to start creating capital markets for clean energy and renewable energy in the region. There's no reason why Saudi, UAE cannot become global centers for renewable energy finance. That's what we need to do. Ask countries to come and list green sukuk, green bonds, funds, and other in our capital markets so we can export our capital. A country like Kuwait is one of the largest investors in the world. They've got sovereign wealth funds, Kuwait investment funds. They are capable. So two things, therefore, I'm concluding. One is we have the ability to acquire the technology, and not only that, to undertake research and development in renewable energy technologies. Why should I be doing research and development on solar in Hamburg, out of all places, if I can do it in Saudi, Kuwait, or the other GCC countries? I should be doing it here. And therefore, what I'm suggesting is that we need to shift away from being simply consumers of technologies to starting to being producers of the technology, then use our enormous capital resources to bring financing of technology into our countries. And one final thing, if we take on this idea that we might end up with a lot of our assets being stranded assets, it means we have to de-risk those fossil fuel assets. What Saudi did last year with privatizing part of Aramco is, I think, the way forward. So our NOCs have got to be gradually privatized. I would have gone for a much larger share of privatization because that would mean a de-risking of the fossil fuel assets. So the picture I'm pointing of the economy that we need to go through is not just one which is decarbonized along with circular economies, but really a deep transformation. And one final thing, we haven't talked about the role of the private sector. What I find very interesting over the past few years, I chair a MENA Region Clean Energy Business Council, is the greater involvement of the private sector in renewable energy. companies like Aqua Power and others are very dynamic, and they brought down the cost of solar down to 1.5, 1.6 cents per kilowatt. This is unprecedented. So what we need to think of is no longer the important role that the NOCs played in the past. We need to think about the important role that the private sector companies can play in terms of technology, in terms of finance, and in terms of private-public partnerships. I think that is what needs to be on the horizon.
No, that's absolutely essential. And indeed, you know, in your role chairing the Clean Energy Business Council, you know, you're dealing with the key players all the time. You can see the results and you know where this works. And it's created a very competitive landscape in many of the areas. But definitely, before we conclude this, I think you're absolutely right. That's one of the topics we need to look at. Adnan, if you can please come in here and we look, you know, at what needs to be done. And again, is it the same for every country in the region? How does it look in Kuwait? What happens in different areas? If you could perhaps follow on that one for me.
Yes, I will. I just want to agree in part with what Nasser said, but I will also want to push back on a central idea that came out of it, is that it is feasible to put all of our eggs in the basket of renewable energy in the future. I take issue with that, and I think Adam mentioned that. All of the IPCC scenarios tell us that you cannot get to 1.5 degree or 2 degree scenarios if you just put all of your eggs and bet only on renewable, whether at the global level or whether at the regional level. I agree with Nasser. We have to take renewable as part of our diversification. Oh, sure. And I don't know whether you know or not, but the first 1 megawatt thermal CSP in the world was in Kuwait, 1984, with Germany. So we've been doing this, and I think I agree with you. We have to push renewable to the maximum. But let me also give another counter example. Germany passed the threshold of 30% renewable, new renewable, not hydro, just a year ago. But they had to do it by putting 120% capacity renewable to generate 30%. So it's not an easy solution. It's economics. The economics are not there. You know, Germany, which championed renewable, and the cost of PV came down because of Germany. But Germany at the cost of the highest kilowatt hour in the world, almost, because of the taxpayer agreed to it. So I don't think we have to look at it in clear. But go back to the question that was raised by Adnan. I think in Kuwait and other parts of the region, they have to do both. They have to look at the clean, at the renewable, diversification, all of the things that Nasser said. But at the same time, we are in the energy business for the last 50 years, and we can be in the clean energy business, including hydrocarbon. Remember, we have know-how, we have infrastructure. We cannot just simply abandon it and go into something else. So in the region, you're going to see both happening. And as long as renewable is still at 1% to 2%, there's plenty of expansion for it, and for the private sector, not for the government. And I think I want to bring in the issue of hydrogen here because it has not been brought in yet. Countries like Japan and the Netherlands and the United States are betting on clean hydrogen as playing a central role. And we can be the providers of clean hydrogen, blue hydrogen that was referred to. Forget about the obstacle. At the bottom line is the cost. And the cost today, green hydrogen that's produced by renewable, green hydrogen produced by renewable, is 4 times as costly as blue hydrogen and 8 times as costly as brown hydrogen. Therefore, we have an opportunity for about 10 to 20 years to work with Japan. Instead of Japan importing blue hydrogen that is from coal from Australia, they can import it from Saudi Arabia and Kuwait. And I think that's really an area where a good part of our future can rest to preserve our assets. And actually, we're helping the world to reach 1.5 and 2 degrees. So that's really where I stand. I stand for trying everything possible that makes sense economically, makes sense technologically, and look at the experience of other countries. Do we want to be Germany paying the highest cost of kilowatt hour just because we want to push renewable? And all experts agree, those engineers agree, that to go beyond 40% share of power in renewable in the total grid will bring in the issue of the cost of the balance of the system. And that becomes almost exponential. So for Germany to go to 70% renewable is going to be a major, major obstacle. We are far from that. So I agree with you in part, and we are doing that. We have to invest in technology development. And nobody is going to invest in blue hydrogen innovation to cut down the cost except our part of the world. And we are ready for it. We have refineries that have been producing hydrogen. And we have gas infrastructure. We have LNG infrastructure. So all of these things are real assets that we cannot just squander. Stop here.
Yes. No, and it's a very valid point in that sense. And again, when we look at the role of gas in the region, Robin, come in here. When we look at the role of gas, a lot of people saying it is a bridge fuel, a destination fuel. A lot of people talking about its cleaner qualities here. And again, a lot of the region endowed with some tremendous gas resources as well. How important do you see gas in the future of the energy mix?
You know, Eithne, I'm very much struck last year. Okay, this was pre-corona and, you know, we had different things in our minds, but gas up until last year had been very much seen as a clean fuel. It's going to replace coal in Asia and so on. I thought in 2019, the mood in Europe and the US suddenly very much turned against gas. And suddenly gas was considered a dirty fuel, a lot of attention on methane leakage, contribution to global warming and so on. And a big push from environmental groups to kind of rule it out as part of future energy solutions. And I'm not sure the Middle East has kind of yet come to terms with this. Okay, you know, we have other concerns right now, but those concerns about gas will certainly come back in the years to come. And the Middle East has bet pretty heavily on gas. Of course, it's the most gasified major region in the world. You know, oddly enough, the Middle East is not actually a big gas exporter. Nearly all the gas exports in the Middle East are from Qatar, obviously the world's biggest LNG exporter. But after that, the Middle East gas is primarily being used domestically. And in fact, several of the countries in the region are actually net importers despite having large resources. So it's a bit paradoxical, really, the Middle East gas situation. The Middle East countries have bet very much on gas for their domestic use, for power and for industry. As Dr. Nasser reminds us, that a lot of that is because it's highly subsidized, particularly the energy-intensive industries that have been built up. They've been built up on the back of cheap gas. If you go back 10 or 20 years, yes, there was a lot of cheap gas around, associated gas that was being captured from oil production and low-cost non-associated gas fields. That gas pretty much now is pretty much all spoken for. If you take Qatar and Iran, yes, still have some low-cost gas to develop, but most of the other countries are moving into higher cost, more difficult gas fields. They're sour fields with high contents of hydrogen sulfide. They're tight, unconventional reservoirs, deep water fields in the Eastern Med. So they're much more challenging and more expensive gas than in the past. And it's much less clear that the region has a real big competitive advantage in that kind of gas versus US shale gas, which has been produced at very low prices now for more than a decade. So this I really think blurs the opportunity for gas to be a real foundation of economic advantage. So this is tricky. You know, the region is removing subsidies on gas. Gas prices are going up. Yes, that's more economically rational. It's environmentally more favorable, but it does mean I think if you're today setting up a new aluminium plant or a steel plant or a methanol plant, 10 or 20 years ago you would have thought the Middle East was the ideal place for it. Now you really question, well, you know, should I be putting that plant in the US or should I be putting it in China, which is maybe more expensive, but I'm right next to the market. So the competitive advantage there, I think, has been blunted. So the Middle East countries face a big challenge here. No doubt, still enormous gas resources, plenty of gas to develop, some very ambitious gas development plans for unconventional gas as well in Abu Dhabi, in Kuwait, in Saudi Arabia, a lot of associated gas to capture in Iraq. So plenty of gas projects to be done, but at a time that the demand growth is probably slowing down significantly. So, you know, the industrial side, you've got competition from other regions, as I say. On the power side, you've got more and more competition from renewable energy, and in the case of the UAE, nuclear power, which will take out a lot of future gas demand growth. There's still quite a bit to be done in Iraq and Saudi in terms of replacing oil with gas. Yes, you know, that's definitely an opportunity. But beyond that, there's a question mark. If all this new gas is developed, what's it going to do? There is, of course, the opportunity on hydrogen, and we've talked quite a bit about blue hydrogen. I think that is one part of the story, but again, the gas in the Middle East, it may be cheaper than some other regions. It's probably certainly going to be cheaper than gas in Europe or in the Far East. But the rents, the cost advantage the region enjoys over other regions is not nearly as much as it is for the region's low cost oil. And then transport costs for hydrogen are very significant. So you've got to think, how do you export the hydrogen? Probably not as native hydrogen. Perhaps it's exported as decarbonized steel, ammonia, and other products. That's definitely an opportunity. But still, these things don't generate the rents that oil and gas production does, that oil and gas production exports did in the past.
And you've given us quite a lot there to think about. We've only got about a minute left for everybody. I do need to wrap up, Robin, and thank you actually for putting that in perspective. I've got to take that in many ways almost as your closing comment. Dr. Nasser, if I can just look for a closing comment from you in terms of, you've laid out a few challenges there, a very realistic, pragmatic look at what we have to do and actually but what would you say to the industry right now in terms of what we need to do to get through this year and again to be ready for the future?
Well, it means that you've got to change your plans for the future. The Middle East, in my view, continues to have comparative advantage in energy, as Adnan pointed out. However, we need to be at the forefront of changing the energy mix. So to my mind, we need to start planning from now to start de-risking all our fossil fuel assets, because that's the central part of our wealth. That's our major source of wealth. That to me means that we have to start looking at climate risk and how it affects our countries and plan forward. It means investing more in energy efficiency, more into renewable energy, and creating the jobs and producing much more of the technology, the R&D locally. I think we need to reorient ourselves entirely towards a future which is becoming increasingly decarbonized, more electrification, more digitalized. So my concern here goes beyond simply just the energy. I need to think about public policy for the economic development of the countries of the region and their diversification. The energy mix is part of that. We need to manage that very intelligently moving forward if we want to survive, because to me, it is an existential threat.
And indeed, as you said earlier, too, bringing the private sector into that. Sorry, we didn't have time to talk a little bit about that. That, I think, is a whole session on its own, and we will get back to it another day. And thank you for bringing that up, Nasser. Adnan, a few closing remarks from you. And I know, as you talked about the prospects for hydrogen and what could happen there, I mean, so many great prospects for everything. But in the near term, what would you be advising perhaps a government in Kuwait, in any country, to actually speed ahead with and make sure the investment is there for?
Twofold. I think they have to start bilateral discussions with the major consumers about providing blue hydrogen for them, if blue hydrogen is in the plans for these consuming countries, such as the Netherlands, such as Japan. So that's one thing. Internationally, they have to work with the UNFCCC and the IPCC and CAPS to make sure that any clean energy, whether it is hydrocarbon-based or renewable, is treated equally in Article 6.2 or Article 6.4. I don't want to get technical, because if you make it essentially the same, you treat hydrogen, whether it's blue or green, the same, then everybody can compete. So that's very important that we work both at the national and the international level. And of course, I would argue strongly, like what Nasser said, I would try to do all possible things to de-risk our oil and gas assets, but without abandoning them, finding a new way of dealing with them, as I outlined in my talk. And hydrogen is one of them.
Thank you so much. And Adam, I'm going to leave you the closing word here. You know, a lot going on, and we're all looking forward to reading your report and seeing what is in there and really digesting, you know, the great work that you have been doing. But again, looking, I suppose, near term to make sure we get to the far term. What do we need to be doing? What do governments and everybody in the region need to be doing?
Well, I think across the region, Aithne, there are programs underway. I liked Nasser's comments about diversifying the economy. Very important. And it's one of the key pillars of Vision 2030 here in the kingdom, along with a vibrant society and enabling the policies to drive and measure the progress that's being made. I think I think we have to be careful, and this is what Adnan is saying about not using the assets that we have available if they can be made clean. One of I remember very clearly 20 years ago, the very strong opinions that existed that we were going to have peak oil supply, that we were going to run out of oil, and that certainly hasn't proven to be the case. Now everybody seems to be afraid that we're going to run out of demand for oil. But I'm not really sure. I think if prices and technology are allowed to act as they do in good economies, that you can accelerate the technologies that would enable the use of those assets. And then that way, the technologies and the resource availability, geography and geology associated with that, public acceptance and the national circumstances can all come into play, and then it comes together and it works. And I think actually that's what we're going to see.
So a lot to play for, I think, from everybody when we look at policymakers, when we look at the public, the private sector, when we look at the producers, the consumers. This really is, I think, a very dynamic time in terms of where we're heading. And I do believe that, from everybody, we're definitely heading, towards a greener, cleaner economy. And this is something that has to be done. And from what we've been listening to and hearing to, I think definitely we see the political will is here in the region, but, a lot of challenges without a doubt. It is an industry that throws up challenges every year, different ones at different times. And I think the industry proves its resilience, but perhaps it's got a few more challenges than it was expecting as we start this decade. Again, I just want to thank all of you for your great contribution. So much we didn't manage to talk about, and forgive me on that. It was great to get your expertise and to have you share that time with us. So Adam Sieminski, thank you so much. Dr. Adnan, Shihab-Eldin, thanks to you, to Robin Mills, and indeed to Dr. Nasser Saidi. I'm really grateful you took the time to join us. We've had a great discussion, opened probably some new dialogue, given something for people to think about. And thank you so much for being part of World Energy Week Live. We really appreciate it from the World Energy Council. Thank you so much.
Thank you.
Thank you.
Thank you.
Pleasure.
Welcome back. And Eithne, thank you very much for hosting a fantastic session with regard to looking at the Middle East. Again, I learned some new things. I learned with regard to the different energy transitions the GCC countries are going through. I learned about the circular carbon economy that was talked about. I also learnt about some of the challenges that need to be thought through. Again, it was interesting within the debate, we had different points of view with regard to how the GCC states can perhaps move forward. And we'll come back a little bit on that. Before I make some comments on that and we move on to some of the admin that we need to go through, Angela, I'm joined by you now. You had a great first session, which I think set us up. I mean, what were your key takeaways over the course of the last hour?
Well, I was listening in on the Middle East session, and I think, first of all, I loved the way we talked about energy not in the abstract. It's about hot showers, cold drinks, fridges and vaccines, clean cooking, the use of energy, because energy transition isn't about energy industry, it's about society. So I liked the humanizing energy element that came in. Yep. I think they were very honest. There's no quick and easy recovery. And of course, we have to remember diversity within the region. There's the oil producing states and the non-oil producing states. Yep. And I think that's something that you come to the World Energy Council for, these regional perspectives and different regional perspectives. And I thought they weren't shying away from the connected challenges agenda, what we would call the join the dots agenda. There's going to be the need for more energy and climate neutrality. And then there's a whole set of challenges around the burgeoning youth the population issues. Where are the jobs going to come from? Where's the industry coming from? Where's the future economy coming from? And then there was a whole series of threes. We can go into the threes in more detail if you want. I was fascinated by the three transitions.
Go ahead, give us some of those threes.
Okay, so 3 transitions at once, right? Yep. So you've got to, I think that was Robin, you've got to think about the shift in the market from North America, from West to Asia. You've got to think about the change in the gas export area, the shale gas in the US and what that means for the gas market. And you've got to think about the new technology. So he had 3 transitions. And then Nasser had 3 crises at once. He had the monetary and the oil price crisis at the same time as the COVID crisis, at the same time as the economic diversification. Just as you're trying to diversify your economy, the world stops.
Yes.
Terrible.
Yes.
And then we had Adam with 3 types of carbon. I learned something there.
Yes.
We have living carbon.
Yep.
We have
durable, I think.
Durable carbon, and we have fugitive emissions. So, a little bit more nuance rather than carbon's the enemy. I like that bit. And then everybody talked not now 3, but more than 3 policy levers. Monetary and fiscal, industrialisation, energy, and let's not forget it, the really big elephant in the room, social policy.
Well, I thought the other elephant, actually, just to add, it was subsidies.
I thought they were quite frank about
it. But in terms of it needs to be dealt with.
Yes, absolutely.
We're not going to incent a move within the region to a cleaner energy or a green energy agenda unless that's dealt with in some way. And I think Nasser and others talked to that, which I think is going to be one of the things. I think for me also is technology. Direct air, technologies, other CCS technologies, et cetera. And again, it's interesting because I was actually on a call last week with Stanford where they were talking about direct air capture, and they have a very different view about the likelihood of that happening over the next 20 years versus the view that Adam had. But again, I think that's the beauty of this, is that there are new technologies out there, and I think all of them have to be embraced and explored in that way.
Yeah, I mean, we would say no energy technology has its social license, and it has to earn it. So it's not even just around the technology development and the cost curves that everybody becomes obsessed with. We really have to stop thinking about technology push and start thinking about societal pull. And, it's going to take IPCC, all technologies and innovation, right? So we're going to see all existing technologies improving. We're going to see new technologies coming on. But most of all, we've got to think about the big uncertainty in the room when we look at any of the scenarios is demand side dynamics and competition. And so we've got to get used to thinking about this customer-centric system, not this supply-centric thinking that we're used to.
Very good. Now we have some questions. So if they've come in on the WhatsApp, so if we've got the time to do that, let's look at that. First question, what about countries in MENA who don't have fossil fuel resources? How does the energy transition look for them?
So those would be countries like the Lebanon, Afghanistan, Cyprus, Somalia, Eritrea. I'm just trying to think of the countries around what we might think about in that region. Well, I think the challenge for them is they need more energy, right? There is no human development without energy. So the challenge for them is the transition to modern energy. And that requires modern energy, not just in terms of the basic access gap that everybody talks about, 850 million people around the world. You can't address energy transition by just providing one house in a village with a light bulb. We've got to think about the energy system, the community-based energy system that enables livelihoods as well as lifestyles. And I think those countries need more energy to start with. And there are options for more affordable and clean energy from a diversity of sources these days.
Yeah, and I think the other interesting point that Nasser made was that at the moment the GCC is an exporter of capital.
Oh, yes.
And actually, if we could kind of refocus ourselves a little bit to think about how could we use that capital base to encourage new uses of energy, new renewable sources, but also the education process, as you talk about as well, from the demand side, because I think that's needed as well. So I thought that was that would be interesting.
Interesting to see the Middle East as the Silicon Valley of energy.
Yep, and exporting it up
and
to Europe.
All that tech.
Which would be good. Okay, question here. Do you believe it would be possible to reach the needed decarbonisation targets if the people don't understand the implications of keeping to the current heavily subsidised energy habits? Question. And wouldn't there be an acceleration effect in reaching more sustainable energy systems if the end users themselves demand cleaner energies and adopt efficient behaviours? I think that's called an open goal for you, Angela.
But I don't think that's a challenge for the Middle East region alone. I think that's the challenge for all societies everywhere. Do we really understand our energy behaviours? Do we really understand how much energy we use in our lives? I think there's so much misunderstanding. I keep saying we need more energy literacy, basic energy literacy, right? Where do you use energy? It's not just the direct use that's so obvious, your electricity in your home. It's all the indirect use, all the clothing we've got, the pharmaceuticals we're using, everything. So I do think basic energy literacy is a challenge for all regions and also in the Middle East. How can people change their behaviours if they don't understand the implications of the choices they're already taking?
Agree. And I think this is obviously one of the changes in the debate that I've observed literally over the last 2 to 3 years. I mean, we've always, if you're involved in the energy system, you know about this, but now I think we're seeing a much broader engagement around this agenda, recognizing the demand side, recognizing that there's a literacy aspect to that, and recognizing each of us have some role to play with regard to our own net zero goals that we might have as we go forward and the changes to lifestyle. Angela, thank you for that. We're running out of time. We now have a break, if I'm looking at my notes here correctly. And I think we're going to be back with you at 12:30. But before we do that, between 10:20 and 10:45, there is a networking break. And for all of you, if you're looking at the screen, that will be the screen. You will see on the left-hand side at the bottom, there is a tab called Networking. And we would encourage you to click on that and to use the next 20 minutes or so, 25 minutes is dedicated to a networking break. Use the opportunity so that you can connect with other individuals and debate and discuss some of the issues, some of the great issues that we've heard about over the course of the morning. Finally, again, please encouraging you to use the hashtag WEW2020. Use it on Twitter and also on LinkedIn. Thank you, Adam, one of the previous panelists, for tweeting. His tweet: people don't want a specific fuel or mitigation strategy. They want good products and services, a clean climate and a good quality of life. In a circular carbon economy, it is doable, but you have to use all of the options available, which is a great advert for the report that Adam and his team will be publishing, as he mentioned, on Sunday at the G20 for Energy Ministers. At which point we'll take a break now, and I look forward to reconnecting with you at 12:30. Thank you for your attention.